In 2012, the search for yield was a very hot play. I'm here today with Adam Patty, the CEO of Index IQ. Adam, how has the appetite for yield changed, if at all?
Well, no, not at all. I think if anything, it's becoming a little more in demand. I mean, investors are looking for ways to drive returns, and even though the equity markets have been on a nice run, I think people are getting a little nervous and looking for those dividend yields to boost their return profile.
Now, how has their appetite for specific products changed? I mean, are they still looking to go to treasuries or fixed income? Because, I mean, there's more speculation out there now that the Fed could end up raising interest rates.
Yeah, I think investors rightfully are getting very fearful about fixed income investments and are looking for alternative ways to get access to that. They're looking into MLPs and REITs. REITs are seeing a lot of inflow. Our ROOF ETF, ROOF is a ticker, has around 6% yield, and we're seeing a lot of play in that, as well as other REIT ETFs are doing very well now.
Which areas do you suggest investors take a look at to invest and get that yield that they're looking for?
Well, I like the REIT market personally. Of course, I'm a little biased because we have a REIT ETF, which is very unique. However, you know, you read about it a lot, right? The housing market is bouncing off the bottom, and even though REITs have had a nice run over the last 12 months, really in response to a huge drawdown over the last few years, now's a good time probably to be reallocating into the REIT space. Okay, so
it's not, that play is not over. How do you feel about MLPs or other alternatives?
Well, MLPs are, you really need to understand what you're buying with MLPs.
Yeah.
They're very tax inefficient. There's a lot of fees related to them. So I just really understand and pull back, look under the hood when you're buying MLPs or packaged products that hold MLPs.
Now, how do these REIT ETFs and other ETFs, how do they impact the volatility of a person's portfolio?
Well, it depends. REITs traditionally, well, it depends on what segment of the cap scale you're looking at, but traditionally, they're going to provide around the same volatility as the broad equity markets, though of course that changes based on what's going on in the market. We find that there's alternative ways to gain access to a fixed income-like volatility profile that might be a little more efficient for those investors looking to get out of their fixed income securities.
Okay, you mentioned at the beginning of the segment that some investors are getting a little bit skittish. We think that maybe there could be a market pullback. I've heard this from other professionals that I've spoken with. Do you think that you wait to get into these alternatives for a pullback, or can you just jump right in right now if you don't have any in your portfolio?
Well, I think you need to be, if you're in fixed income heavily now and you've been part of this historic run up over the last 24 months or so, you're probably wise to start peeling back your allocation now. If you don't have any fixed income, which might be a little odd for somebody who's using a well-allocated asset allocation program for their portfolio, you probably want to be looking at alternative forms of investments, particularly liquid alternative investments that should hopefully provide that volatility profile that's similar to fixed income, provide you some yield, but also provide you price appreciation as interest rates rise.
Okay, well, if you're looking for yield, now's the time to get into some alternative investments. It's time to pare back your exposure to the fixed income sector, according to Adam Patty at Index IQ.